All right, welcome to the Money Puzzle. Last week I called it Peace of Mind Radio.
Yeah, you did.
It's actually the Money Puzzle, which we changed the name about a year ago, and I still haven't figured it out. But anyway, all right, so welcome to the Money Puzzle. Today we're talking inflation. Again, it's a follow-up from last week. If you didn't get a chance to watch last week's show, make sure you go back and check out last week's show. We specifically talked about gasoline, so we're not necessarily going to talk about gasoline explicitly today. Today we're talking more about just general inflation, how it affects clients, and what you should do to prepare for it. Because what we do know, because we've had a ton of people walk in the door over the last year, is that you're not preparing for it, or you've not prepared for it. And so we're going to make sure that we talk about ways that you can do, or things that you should be doing today to prepare for situations like this where we have huge inflation. So with that being said, phone number for us, 502-200-5214 or 5210. And just so you know, we've had a couple people ask our office location. We're actually here in Louisville, and building is at the corner of Hurstbourne Lane and Shelbyville Road. So we've had several people ask, hey, where are you located? So we thought we would point that out.
But we're not in the Flash Cube building. We're next door to the Flash Cube building.
That's right. Yeah, we're actually right sort of behind, next door behind, something like that. But anyway.
Behind P.F. Chang's. That's the
behind
P.F.
Chang's. Yeah, there you go. So with me today, Chris Vaughn. Chris is one of our partners, and he and I were, before the show, before we recorded the show, we were just talking about inflation and how it affects people. And really, I'd say over the last 3, 4, 5 months, right, this has been the topic of conversation when somebody walks in the door, right?
Oh, yeah,
It's all
absolutely.
about inflation. That's all anybody ever talks about is they're paying more at the pump. They're paying more just when they go to the grocery store. So Chris and I were like, hey, what should we do? Well, let's do a show on, let's continue on conversation with what Aaron and I had last week, and let's talk about inflation. Generally speaking, we're going to walk through, and we've got several of them here.
Yep.
We're going to walk through the different, I guess, the main points of inflation, right?
Yeah.
Because there's a big disconnect between the reported inflation that we hear reported every day and what inflation really is. So talk about the government, the CPI minus food and energy. Talk about how they, it's a disconnect, really.
Yeah, it is. What they base the inflation number on, when you see that number on the news or on your app or however you take your news in nowadays, it's the CPI-U. So the CPI is the Consumer Price Index, and then there's a bunch of different versions, and the U is urban. And I don't remember all the details about how you get into it, but it's basically this is how much it costs to live in a city in the United States. And then what they're looking at is a year-over-year number. So when they say it's, I think it was 8.6 is what we got for May. Is that right?
I believe so.
So what they're saying is it costs 8.6% more for everything that you buy than it did in May of last year. That's what that means. But you know what? We were talking about some other things. Gas is not up 8.6% since last year. It's up a whole lot more than that. And everything that you buy is affected by the cost of fuel. You all were talking about it last week. When you go to the grocery store and you go, oh my gosh, these bananas they've gone way up. Why are bananas more expensive? Because you still have to get them to the grocery store. They don't grow this stuff behind the store. So fuel is driving the cost of everything like that, and it's a whole lot more than 8.6%, at least in what we feel.
Yeah, and don't you think so we're talking about inflation day, but this really kind of goes to most government numbers, right? If we look at, because we talked about this the other day, just in our group, talking about the unemployment number, that's what, 3.6, 3.8%, something like that. That's ridiculous. We know it's probably more along the lines of, I always say it's the unemployment number plus 15%.
Yeah.
Is really what the number should be. So it's probably closer to 18, 20%.
Well, it's the number's based on how many filings they've had for unemployment claims. That's not, there's more to it than that in reality, but there's no way for them to calculate that accurately. That's why it's always worse than what they say it is.
Yeah, I totally agree. But again, I bring that up because I think inflation is the same thing, right? So inflation, they say, is running 8+%. My guess is we're going to get another inflation number coming out, probably in the next couple of weeks. Did they give June yet? Or no, we'll get June here in a couple of weeks. What I meant to say.
We'll get that beginning.
We'll
of
get
next
that
month,
here in a couple of weeks. Yeah, and my guess is probably going to be probably closer to 9%.
I think it's going to be similar to what they gave us last month, or maybe worse. Yeah.
Yeah, it could be closer to 9%. So what we thought we'd do is, and I actually posted this on my LinkedIn page. So if you want to go back and check out the full article, just go back, search me up on LinkedIn, and read my last post, I believe, or maybe it was the post prior to that. But let's just walk through this, because what I did was I said, okay, what are the things that we consume or use, and what's the general hey. People walked by and they were like looking at us like, and I was like, all right, we're doing a podcast anyway. But what I thought I'd do was sort of run through, and that's what we'll kind of go back and forth here. Let's just run through the top items, groupings, if you will, that affect us the most, and when we were researching it, what research said has actually happened. Okay. All right. So first of all, let's talk about food.
Right.
So I don't. It's one of those things, I didn't find a specific number, okay? But generally speaking, the way I look at it is, and I've talked to a lot of people, you go to the grocery store, I know I buy kind of the same stuff, right? Yeah. I'm not a click list guy, so I don't just click the exact same stuff. But when I go in there, I'm pretty much buying the same stuff, unless I have to buy toothpaste one off or detergent or what off. But for the most part, if I go in there, if I go back 2 years ago, my average bill was somewhere 120 to 100, 110, 120 bucks, something like that, right? I go in there, buy the same stuff, not like I'm buying anything different, still the same brands, whatever I was buying before, and now I'm like 150 to 170. That's more than 8%.
Yep.
I'm not I can't do math that quick, but I can tell you that's more than 8%.
Yeah, agreed.
Right? So what's been your experience?
And I would tell you the same thing now. In my house, my wife does all the grocery shopping. And before you get upset, the reason she does all the grocery shopping is because if I do it, we're going to have donuts and beer. That's the only thing that'll make it home if I go to the grocery store. I do remember to get, toothpaste and deodorant and stuff. That's about it. So anyway, I can tell you she is a click list person at Kroger. Yep. She's really loyal to that. So she's ordering basically the same things week in and week out with some one-offs. And she's been complaining about the cost of multiple things for quite some time now. So I couldn't give you the numbers. She intentionally keeps that away from me just, to keep my brain from exploding. But she has been griping about how food has really, really skyrocketed the last almost a year now.
Yeah. All right. So we kind of handled gasoline last time, so we won't necessarily talk about
But
gas.
I would go into more on the food side. My opinion, it is the cost of fuel that is driving that cost of gasoline. These are not finished goods that are being produced for the most part you buy in a grocery store. Food or consumables, that we don't have a supply problem with that necessarily other than the cost of getting it to market.
Well, the other thing I was going to say, energy-wise, you were energy, where I was going to take that was, I'm not going to necessarily talk about gasoline. However, I do think it's an important point, and Chris brought it up. And by the way, we didn't talk about that. It just happened to come up. If you go back and look at Target and look at their earnings report from last month, they actually top-line revenue, which is kind of gross revenue, okay, their top-line revenue grew. Their visitation, meaning the people that walk in the door, traffic count, was up. Why they missed numbers, and they missed pretty big last quarter, was because of fuel charges. It was almost $1 billion in extra fuel charge they were going to take this calendar year alone, in fuel cost, unanticipated fuel costs. And
that's not a total $1 billion. That's more than what was already anticipated.
Correct.
Right? Yeah.
Yes. Correct. Yeah. So that's why. I mean, if you look at it, you're like, okay, look across the board at the earnings, and we're not going to talk about earnings right now. But if you look across the board earnings, a lot of the misses, if you will, were due to energy costs. It wasn't due to traffic count. It wasn't due to us coming out and spending money. It was due to energy costs, which, again, we don't think of that as inflation. Yes, gas prices have gone up. But that's really, an impact of inflation is when we look at our 401ks and all the prices have gone down, it's the fundamental or the underlying factor, if you will, is fuel costs.
Yeah, that's the big one, no question.
Oh, yeah, absolutely. It's kind of been a punch in the face. All right, let's talk about housing. So we're in Louisville. It's not as bad as it was about a year ago.
It was unbelievable last year.
Unbelievable over the last couple of years, but housing prices have gone through the roof. It is slowing down. So we got housing starts have fallen considerably.
Now, it is slowing down. That's not to say it's slow.
It's not stopped, that's
right.
for
it's
sure.
It's still going, just not as bad.
It's nowhere near. I guess I was comparing this period to last year. It's dramatically slowed down, but it's still good. Don't misunderstand. However, so we looked at the U.S. National Home Price Index. The average across the United States is up 18.6%.
That's year over year. That's not like over the last 10 years. That's since last year. That's
since last year.
Unbelievable.
It is shocking.
Yeah.
Now, and the average home price was $227,000, something like that. That's a big number. Right? It's almost $40,000.
Right. So if you think about it, just to put that in perspective, if you're up 18% year over year, right, on a $200,000 house, that means that your $200,000 house last year is worth $236,000 this year.
Yeah.
That is huge. It's more than what most people can process.
Yeah, and there's all these multiple things. You have to look at it from this perspective. So, Chris, if you go out and buy a house today, and let's say last year you could have bought that house at $200,000. This year you're having to pay $236,000. Your mortgage payment has gone up.
Absolutely, it
right?
has. Yeah.
So now you're paying more for that house, right?
And my tax bill has gone up.
And your tax bill's gone up.
And my homeowner's insurance is going to go up because the insurance company has to cover more now.
Right. So now you have less. That's a form of inflation.
Absolutely.
When your tax bill goes up, when your homeowner's insurance, so there's all these trickle down effects of increase across the board, number one, but that's more. We're just talking about housing increases.
Yeah.
So it's not just what you pay for your house. There's a lot more to it. All right, so let's go to the next one real quick. Cars is another one.
It's unbelievable that the value of vehicles that are used vehicles have actually gone up recently. This is a depreciating asset. We've joked for years about how when you buy a new car, that thing loses $5,000, $6,000, $7,000 in value the moment you drive it off the lot. That is not true anymore. You know, because there's so much of a demand for vehicles, it's been unbelievable. There's as I'm driving into the office in the mornings, Carvana has put up one of those vending machine towers, and before COVID started, that was full, and they had it lit, and it was a really kind of a cool looking thing, right? They haven't been lighting it in quite some time, and I think it's because half the spots are empty.
I went by there yesterday because I know you're talking about the one out here on 64.
Uh-huh.
I drove by 64. They had 3 cars in there, and one of them was a Carvana car.
Wow!
So it probably wasn't even for sale. Probably just one they had to stick in there just to. It's unbelievable. But the interesting thing about used cars is Let's see. Blah 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 blah. The U.S. Bureau of Labor Statistics said that used car and truck prices jumped 40.5% from January 21 to January 22.
Unbelievable numbers.
It's shocking. Yeah. But here's the most unbelievable thing. So I have a 2000. I bought this in 2020. I have a 2018 Jeep Wrangler. Okay, and I bought it from Cross Jeep here in town. So I had a guy call me from there and said, "Hey, are you interested in selling your Jeep?" Yeah. I'm like, "No, dude, I love it. I love that thing." They were willing to offer me more than what I paid for it 2 years ago.
And they're planning on reselling.
Yeah.
So they're not offering you what they think it's worth.
Right, exactly.
Unbelievable.
Yep.
Yeah. Oh my
gosh. It is, and I'm hearing that more and more. People are trading in their cars, and they're like, I bought this car 2 years ago, drove it, 24,000 miles, and I usually, trade in a car every 2 years. And they're giving me more for that car now than what I paid for it 2 years ago.
It's an appreciating asset. I mean, that's the way real estate is supposed to work. Now you got cars doing that recently.
Yeah.
I'm curious. Let's talk about what the cause of that is. I can explain the cause on a lot of these things, but vehicles is a little bit of a stretch. So, do you think, for example, that there has been a big chip shortage? And of course, they can't make a car that doesn't have computer chips in it now. Out where I live in Shelby County, there is a temporary site that they had leveled out in order to do some new utility poles. Ford has come in and fenced that area in, and at one point in time, there must have been several thousand full-size trucks out there and security guards. And it was because they had produced them, but they didn't have the chips.
Right.
Well, they finally got rid of all of them. Well, it's filling up again, and it's not just their full-size trucks. And in addition to that, there's a bunch of Amazon vans out there, brand new.
Yeah.
So is that what's really driving this appreciation in vehicles, which is not normal, and it's part of the inflation issue?
Yeah, I think that's part of it. I think there's a part of it in the pandemic. I think there was cars where we weren't trading in our cars because we couldn't go into places and trade in our cars, and so usually there's this constant flow of us selling our cars and buying new cars. And I think that kind of slowed down. And so there was
we're all dying to go get a trade our car in now because we delayed how long it would normally take us.
Well, yeah. Well, we all started getting the whatever money we got from the government, and we're like, hey, let's go spend it. Let's just go buy a brand new car or go buy a used car. And then so the demand sort of outpaced the supply by a long shot. And so, and I know that was the case with, a lot of cars that you would go to like to Avis or Hertz or whatever, rental cars. What they did during the pandemic, they were dumping those inventories because they couldn't hang on to them. Right. They were just getting rid of it. And then all of a sudden the demand came back for rentals and they had no rentals. So, there for about 6 months, it was very difficult to find a rental car.
Oh, yeah. People were renting U-Hauls
when
they were on vacation just to get around, Florida or California or wherever they went.
Yeah, it was bad. I know we struggled a couple times we traveled. And so, but I think that's all kind of taking care of itself now. But I know even you drive by any car lot and there's still, it's getting better. It's a lot better than it used to be. Now you go by, the parking lot's about 3/4 full. It used to be, maybe a third full.
Yep.
But now it's about 3/4 full. So I think the automobile industry is now coming back and where it's a little bit more normal. So I don't think you're going to see, dealerships call and say, hey, I'll give you the same thing, for your car that you bought it from me 2 years ago.
Are you regretting that decision at this point?
No, because I love it. I know I don't. I love that thing. All right, so let's keep going. So clothing. This is an interesting one. So I started Googling clothing, and there wasn't – I couldn't find a statistic about the increase in pricing of clothing, although there were some hints about clothing. But it said that clothing didn't go up that much. And I will tell you that I see that because I'll go buy a pair of shoes or buy a pair of pants or buy a shirt. I was looking for a pair of jeans specifically, and I found the same pair of jeans I bought 2 years ago, and there wasn't much price difference. So it wasn't like it went up 30% or what. It was not that much different. Now, I don't buy a ton of clothes. I'm not a big shopper, but it did say that it had gone up about 5%, which is a little shocking to me.
Yeah, I've kind of had the same experience. I'm a little bit of a I've got more shoes than most women, so I do keep track of those prices because I buy them so much. I have not noticed a big increase in that.
Yeah.
It seems like the cost of clothing is going up, but you and I are in similar situations. We've got 2 boys each. They're growing so fast that you're constantly buying. So it's kind of hard to keep track of is the actual cost going up.
Yeah, but I didn't see where it said it was a huge number.
Yeah.
I just didn't see it. Utilities kind of thing. That's more of a regulated industry. So you're not going to see prices go up, 20% because it's regulated. I think it said the national average was 3.9%. That's about right. I think I haven't really noticed. Like I do my LG&E bill here. I actually do the budget billing. Mm-hmm. So mine's the same throughout the year. And it's really not – I mean, it's gone up some, but it really hasn't gone up a whole lot in the past 4 or 5 years. So
my wife and I were talking about this one the other day. We're on KU out where we are.
Yep.
And she said, it really went up. And I said, well, let me see. And if you look at the back of your statement, people don't realize this. You say, okay, well, in the month of June, I paid this amount.
Right.
Well, last year I didn't pay as much. But how many days were you billed for last year? Sometimes you were billed for 32 days, and this year you're billed for 29. So I have not noticed that the utilities have gone up because they are very, very regulated.
Yeah.
But if you have that sensation, you might want to go back and look at that. It may not be a fair comparison.
Yeah, and what I would tell you is if you're not on budget billing, you're crazy because budget billing is so much better for cash flow. We're not talking about financial planning right now, but it does make a lot of sense to be on budget billing because you basically pay the exact same amount all year, and you can budget with it. Especially you avoid months like right now where we've got 90 plus weather outside every day. It will be for the next month. You get your LG&E bill, it's not going to be $80. I mean,
it's going to be a little bit higher this time.
It's going to be a little bit higher. So you can just avoid those big swings in your utility bill. So I'm a huge fan of budget billing. And by the way, so are the utility companies. They'd rather you be on budget billing than not be on budget
because
billing.
it makes it easier for them to do their own budgets.
Yeah.
So yeah, they are fans of it.
Yeah, for sure. All right, let's so cable, cell phone, internet. Another one that I haven't seen increase that much, like on my cell phone bill, it's been pretty much the same. It's gone up a little bit, but not a tremendous amount. Now I have, if I go get a new phone or something, the price of that, if I want to get that on a budget or on a build over 12 months or whatever, that'll increase it. But I really haven't seen the service go up that much.
I haven't really noticed anything on that. Keep in mind that in that industry, most everybody is in a price contract. So, it has to do with when you buy the phones and all that. Here's the price. So you don't see those go up very, very rapidly because they're kind of built out a year or two in advance.
Yeah, the only exception to that, I'd say, so we kind of lumped this. That's really part of utility, but I lumped the cell phone, internet, and cable in one lump because cell phone, I really not noticed it. My internet, which is lumped into my cable, I did go back and look at the last 12 months. It's pretty much been that's what they've has been pretty consistent. It's the cable. My cable bill went from $190, which is completely ridiculous to begin with. It was $190, I don't know, a year and a half or so ago. And it's a $225, I believe now. Wow. That's an 18% increase. And I still watch the same 8 channels. Not like I watch anything different. I'm not watching anymore. But they'll just tell you that the price of just delivering content is going up.
Well, and that kind of feeds into this. This would also, I would consider it to be a utility / entertainment type thing. My internet, I don't have regular cable. I use streaming services for my live TV. But I do have cable internet. That's in a contractual price that I'm grandfathered into. As long as I don't change it, I'm going to get that price forever. But the different streaming services, the way that we're consuming our entertainment, those are going up, and they're going up fast. But that's not necessarily driven by the same inflation that the rest of this is. We're finding out, and this has been in a lot of the earnings reports that these companies, Netflix most famously has come back with, they're not making enough money to keep up with their competition.
Right.
So they're having to produce more shows and more expensive things. And of course, those are expensive, and that's raising their expense. So they're having to raise their rates just to keep up with the demand that people have for the latest, greatest. So that is a form of inflation that we're all experiencing because most of us do use those services.
Yeah, for sure. All right, so what we've been talking about is just the overall inflation and how really when you look at the number, you look at the CPI number, even though they exclude food and energy, which is really one of the most, inflation impact piece of what we consume. Don't believe the 3.8.9, 3 point whatever it winds up being. Don't believe it. You have to go based off what you're actually spending. So you should do your budget and look back and say, this is what I spent a year ago. This is what I'm spending now. That's the real cost of inflation. That's what you have to look at. That's what you got to plan for. So, Chris, just in a minute or so we've got left, maybe talk about how you encourage clients to plan for inflation.
When I'm talking to clients, when we're developing a good financial plan, one of the things that I tell people that I always get groans for is that you really should work on a budget. Oh, I don't want to do it. It's a bad word. But I will tell you that if you have that budget built into the overall financial plan and you're automatically increasing those budgetary expenses year after year so that you're forecasting some inflation in, then number one, the inflation is not as painful because you already had that figured in. And number two, when you do get the inflation numbers like you have right now that are a lot higher, at least temporarily, than what that forecast is, you're minimizing that pain. I hate doing a budget too. It's not a fun thing to do, but it's amazing the pressure that it takes off of you. Knowing that here's how much money I've got to spend on these types of things and having that inflationary increase in that budget built into it over time, it just gives you so much peace of mind. When what's the biggest stressor that people have? What's the number one cause of divorce? Blah, blah, blah. It always comes back to money. And if you've got that budgeted out correctly and you've built a good overall plan, man, it just makes life so much easier.
Yeah, yeah. It truly is all about planning.
Yeah.
And along with what Chris said, we talked about this last week in the show. So if you didn't catch it, make sure you go back and catch that. Aaron and I talked about the impact of inflation, especially on gas prices and why gas prices have gone through the roof, and how there's this disjointed relationship right now with the price of oil and gasoline. And we talked about how do you plan for inflation. Chris and I have been talking about it, but at the end of the day, it comes down to the same thing. You have to plan for it. And when you do a good financial plan, you plan for things like this, where it's inflation. You don't have to go and stop driving your car, or stop going out to eat, or stop going to the movies. You don't have to do that. You just have to plan. And what we know is that the majority of you that are watching this right now have not done that, because we get people that walk in the door all the time, especially over the last 6 months, have said, you know what, I have not planned for this. This inflation is kicking my butt. I want to make sure that that I'm still on track to retire. Or I want to make sure that I do what I need to do in order to minimize the impact of inflation. We do that by doing a financial plan to know that, yes, there are going to be times like this. We're going to have another case where we're going to get huge inflation. It's coming.
Oh, yeah, it will happen.
It's coming again. Even when we get past this, it'll happen again. So we just have to plan for it. That's the key. So anyway, appreciate you watching. Again, if you want our phone number, 502, I'm sure Mr. Producer will put it up there, 200-5210. You can visit our website at FWP, that's Frank William Paul, partners.com. You can go back and look at any of our other podcasts. We also have another podcast that we send out every week, which is called Something in Bourbon. We hadn't figured that out. But it's
We
cool.
were calling it the FWPP Bourbon Show last time.
Oh, okay. All right. So we got a big fancy
I'm not
term.
there.
Yeah. Anyway, it's a cool show. We talk about bourbon every day, or not every day, but every week. So we do have a couple of ways to enjoy our content. So whether you're watching us on YouTube or you're listening to us, just make sure that you rate, like, subscribe, rate, review. We would appreciate it. And make sure you share it. So if you like our content, just hit reshare, share it to your audience, and say, whatever comments you want to say about it. So anyway, that's it for another week. Make sure you tune into our show every week. You can also catch the Money Puzzle TV show that comes on every Saturday morning at 10:30 on ABC, though that may be changing a little bit. But you can check back to our website. We'll have it listed where and when that airs. So thanks again for watching, and we will see you guys next week.
The information given herein is taken from sources at IFP Advisors, LLC, doing business as Independent Financial Partners, IFP, IFP Securities, doing business as IFP, and its advisors believed to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors. This report may not be reproduced, distributed, or published by any person for any purpose without IFP's express prior written consent. Securities offered through IFP Securities, LLC, doing business as Independent Financial Partners, IFP, member of FINRA and SIPC. Investment advice offered through IFP Advisors, doing business as IFP, a registered investment advisor. IFP and Family Wealth Planning Partners are not affiliated. The information given herein is taken from sources at IFP Advisors, LLC, doing business as IFP, IFP Securities, LLC, doing business as IFP, and its advisors believed to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors.